This is Made for More Living with Johnny Jennings, powered by eXp Realty. Online at madeformoreliving.com.
Growing up, I always thought I would work for somebody. Like I went to high school, then I went to college, and I just figured I would end up working for somebody. But now
you do work for somebody. She's called your wife.
She's called my wife. She's called Valerie Jennings, my ex-girlfriend, my baby mama, and the love of my life. But I ended up, pivoting into becoming self-employed and, getting into real estate. But it's just funny how like college, what you think is going to happen in college ends up taking a different twist.
Sure, absolutely.
Did you go to college, Matt?
I went to college and I got my degree in communication media arts, which is what I do.
Okay.
But
You're one of the few. Most people don't.
It's true, but my job didn't require the degree. So I got this job and I've worked my way up 24 years without the necessity of a degree. But my degree has also helped me get my master's in teaching, which hopefully one day I'll be able to do, but who knows? But you're right. I did go to college, spent a good amount of money, and didn't necessarily need it at the moment.
Yeah.
So
yeah, totally get that. And then on the show today,
did you graduate with a degree?
I did.
What was your degree?
I majored in history, minored in political science.
Okay, so those are applicable in many areas.
If you want to teach.
Right.
If you want to teach.
Sure, in a financial, practical way, no. Yes, it didn't work out that way.
In critical thinking, it helped. That's the biggest thing. But would I go back? Would I pay all that money? I probably wouldn't.
And where did you go to school?
I went to the Harvard of the West Coast.
Stanford?
Bakersfield. Cal State Bakersfield.
Well, there you go.
Yeah, so that's where I went. But on the show today, we have Miss Lindsay Boris with American Pacific Mortgage. She's an absolute gem, and she works incredibly hard. You have, what, 2 young kids?
I do. 3 and 4 years old.
3 and 4, okay. And you went to college as well.
I did. Yeah, I went in a very different direction, ending up in mortgage from where I got my degree. But I went to San Diego State, and my
gosh, everybody dreams about going to San Diego State. Is it all that it's cracked up to be? You're surfing every day. You're on the beach.
It was absolutely
classes being held
that it is
at sunset on the ocean.
I lived in an off-campus apartment, but right on campus that was on this cliff that overlooked down part of San Diego, and I rode my beach cruiser to campus every day.
Wow.
And spent all my extra time at the beach, and it was as magical as people.
Were your parents fitting the bill for this?
I stayed in Sacramento where I grew up and went to...
You're from Sacramento.
I am from Sacramento. Okay. I stayed here and got my undergraduate and did my AA.
Okay.
And had a little bit of money set aside for my grandparents in a 529. Nice. And that paid for my last 2 years. So I just got my undergrad done here, went down to San Diego, spent 2 years, and got my degree.
That's awesome.
So after you what'd you get your degree in?
My degree is in medical and cultural anthropology, and so it was very research based. And when after I graduated and came back to Sacramento, I was working at UC Davis at a stem cell research lab.
Oh, nice!
And it was very cool.
Yeah. You got to really use your degree.
Yes, I was doing the work in the lab. And thought that it was everything that I wanted it to be. And the people I worked with were great. The place that I was at was wonderful. Mm-hmm. But it didn't really fit my family life. I didn't have the balance. I was in the stage of my life where I was getting married and wanted to start a family, and didn't know that those two things fit together. Mm. And I had a family member that worked in mortgage and had an opportunity for me, and I took the leap of faith and ended up in mortgage and started working my way up, and then eventually switched over to the sales side, and have never looked back.
Never looked back. You have tons of experience. So, I mean, if people are watching the recording or hearing this story, they're like, how much experience could Lindsay really have? Approximately how many loans would you say you've done?
Oh, my goodness.
Because that would be the equivalent of like how many homes I've sold is like how I would benchmark experience rather than age. Because you can be in the industry 40 years and you sell 40 homes, or you can be in the industry 5 years, and sell hundreds of homes. And so like for you, how many loans would you say you've done?
So far this year, our team has done 30 million. In volume. What that equates to in units, we probably well over 2,500
Loans.
A lot. Yeah.
I'm sure that if I went back, that's a statistic I'm going to have to look up now and average it out. I would say that it's a pretty big number, and it's helped diversify the experience that I've had. Just
So you've helped 2,500 families get into a home or buy a home, right? So when we have Lindsay on the show, just so you know, she's not wet behind the ears. She's been doing this a long time, has a lot of experience. And so you were talking about how you anthropologist, what was it?
medical and cultural anthropology.
Medical and cultural.
Which is what? What is that? What does that mean?
So what I was doing in college, my degree was primarily research based. So I was doing medical research, and with an emphasis on culture and humans and how those two things played into each other. So that's how I ended up working at the
I can tell she's trying to dumb it down for us. Matt.
Right.
Yeah,
didn't
she's
wanna
trying to
go-
make it simple.
I didn't want to go too deep
How
into
can I
it.
explain it in
But
Johnny
essentially,
J?
you got into this business, and now you're almost not necessarily self-employed, but you're co-running the business, and that gives you a lot of empathy with a lot of people who are also running businesses, because there are so many people, myself included, who do not want to, shall we say, overpay Uncle Sam in taxes. But that makes it harder to qualify for like other types of loans.
Can we pause for just a second and
Yeah.
explain a little bit more about what you're talking about?
Yeah. So what we're talking about is, let's say you own a business, maybe it's just you, maybe it's you in a small company, or and what most people try to do. Let me back up just half a step further. So if you are not self-employed, you get your paycheck every week, every 2 weeks, every month, whatever it is, and out of that, depending on what you're claiming, right, your taxes are automatically deducted.
Right.
And sometimes people like to, claim a little bit more, so then that way they get a return at the end of the year rather than have to owe money at the end of the
Right.
year. But taxes, every paycheck are automatically like a little piece is coming out to pay the state and the federal government. Well, when you are self-employed or you have a small business, you don't have to pay those. Like every time the money comes in, you have to budget for
Right.
the taxes. And what's different between self-employed versus a W-2 is, with the W-2, you get the taxes taken off the top and you're left with whatever's remaining.
Right.
As a self-employed, you get to spend that money in marketing and human resources and fuel and transportation, all these other qualifying expenses, and then you pay taxes on what's left over. So what most people do who are self-employed or have a business is they want to invest in their business as much as possible and get that taxable income down to as low as possible.
Sure.
So you're showing no profit, little profit, negative profit, but then that makes it harder for you to qualify for a loan, because the bank is going to go, well, you didn't make any money. How are you going to qualify for a mortgage?
Right. Okay.
And so that sets the table a little bit for the conversation that we're having, where it's like Lindsay is a pro in helping self-employed people qualify for home loans. Isn't that right?
Yeah. So just like you're saying, Johnny, that we see that a lot of people, even if they're making a ton of money through their business, will write off the majority of it, and sometimes even have an overall negative net income. And they're paying themselves throughout the year,
Yeah.
and they're making money, but what's shown on paper is minimal or a negative amount, and makes it impossible really to qualify using your tax returns with a standard mortgage.
Yeah. And so just so we're clear, so you're like, how does it go negative and them stay in business? There's deductions you can take. Certain investments allow you to depreciate assets over a period of time. So if you have enough of these assets, you can actually show, a negative income, even though the business is profitable.
Right.
And so from Lindsay's perspective, she's looking to see, are they actually generating like income? Are they profitable?
Yeah, how much income is coming to this individual? So when they're in a situation like that where their net income is low or negative, there are alternative ways. One of the ways that we can circumnavigate that and get people qualified to show a more true reflection of the income that they're making on a regular basis is with a bank statement loan. And we're looking at 12 or 24 months of their average deposits into their business account. So, for example, we had a client that on paper, between his 2-year tax returns.
What do they usually look at then?
What do you mean?
What
Qualifying?
does a bank, how do they usually get qualified? If it's not the bank statements, what is
We're typically looking at their most recent 2 years filed tax returns.
2 years filed tax returns is what they're usually looking at.
Correct.
And again, like you said, if they're self-employed, then that's going to be really low because of all of their write-offs.
Yes.
Yep.
And you're saying your method is what?
So say on their tax returns, they file very little income, even though the business is doing well, and they average to $5,000 a month between their 2 years' taxes. It's not really enough to qualify. A lot of times these people are making good money and they're looking to purchase relatively expensive homes.
Yeah.
So we can look at your most recent 12 or 24 months bank statements and average your deposits. And we have had, very recently, we had a client that he went from averaging $10,000 a month based on his taxes to over $80,000 a month. And that's what we were able to use as his qualifying income, because he had $80,000 to $100,000 every month in business deposits. Revenue. And so then he was able to qualify for really whatever he wanted and opened up his possibilities. And the qualifying on it is not terribly different, 10 to 20% down, depending on your credit score. And the process going through is no more complicated than a standard loan if we were using the tax return. So,
but the difference between Lindsay and the JJ Mack team and other lenders is a lot of lenders will not do the bank statement loan. Like
Why won't they do that?
It's more work.
Is that what it is?
It's a specialty product, and there's, like Johnny said, they're a little bit more work, but they also it's just not a product that everyone offers.
So like think of and correct me if I'm wrong, this is maybe not the perfect analogy, but Dave Ramsey's always talking about because he's a big advocate of not having debt, not having any consumer debt, so you don't have a credit card, and so you don't have a credit score. He if his perspective is I'm winning, you're winning if you don't have a credit score, let alone a bad credit score, a credit score at all. And so what he's an advocate for is he calls it manual underwriting. And that's essentially what Lindsay's doing with these businesses is they're going in and manually underwriting. Like forget what the FICO score says, forget what the tax returns say. What is the actual financial picture for this person, and what can they actually comfortably approve? Because that's the other thing I really appreciate about you and JJ and the whole team is it's not how much are they approved for. What they focus is on what's a comfortable payment for the person,
right?
Like long term. Because we're all about the not what if interest rates go down, not what if this person's elected, but even if interest rates go up or down, even if this person's elected, the person's going to be safe and comfortable with that payment for years to come.
Yes, absolutely.
Yeah.
We just had a client that came to us thinking that they wanted a bank statement, or an alternative document loan. Turned out he made enough money on his taxes for the price that he wanted to be at. Because for him, the amount that he qualified for wasn't quite as important as staying within a monthly payment budget that felt best.
Got it.
So we weighed the option between those two and don't need to go with a bank statement option because it made sense for him, but we gave him those options so that if he did decide to put less money down or go to a higher purchase price, he had that option.
Yep.
We can look at it from two different avenues.
And so if you're listening and you're like, hey, this sounds like something that I might be looking for, this might be a solution to my problem, just go ahead and give us a call or shoot us a text at 530-GET-MORE. If you shoot us a text, just send text LOAN, and we'll get you over to the JJ Mack team so that way they can look at your finances. It's free. It doesn't cost anything. It's a quick 2-minute conversation. They don't need a whole bunch of information from you. It's just to see what programs you qualify for. So just call or text 530-GET-MORE, and we'll get you that information. And when we come back, we will be talking about their buy before you sell program. So are you wanting to maybe buy your next home before you sell your current home? We're going to walk you through step by step exactly how Lindsay's team helps you with that.
So are you curious what kind of offers you could get on your home? Then reach out to the best in our area. That's Johnny Jennings and the Tom Daves team with Made for More Realty, powered by EXP. There's a reason, guys, why they have more 5-star Google reviews than everyone else in our area, why they sell homes 27% faster at an average of 3% higher selling price. Find out about their Fix It Before You List It program. Even if you don't have the time and the money to do those repairs, they're going to help you get that done so you can get your home on the market and sold as fast as possible. That's Johnny Jennings and the Tom Daves team with Made for More Realty, powered by EXP.